Hello viewers, today I again came with a topic of share market. Today the topic is market capitalization, and we'll definitely discuss what is market capitalization and how it is affecting the buying decision of shares. And I must tell you, previously I did some videos on the whole working on a share market in a very layman's language. I did a video on price earning ratio and dividend policy of a company, together explaining these things. And I also did a video on the Nifty 50, how it is affecting the share market. So if you want to watch this video, please go to my YouTube channel, subscribe, watch those videos, like it, share it, and please do comment. Now I'm heading towards market capitalization. I must tell you, it is a very important parameters to understand what share to buy and how to make your portfolio. Portfolio means how to understand in which stock to invest and in which stock not to invest. And if you're investing in very high budget stocks, then how much you must invest in low budget stocks. And there should be a mix and match in your portfolio of both high and mid and low budget stocks. And today we'll discuss that how to identify these kind of stocks, which is a very large cap stock, which is a mid cap stock, which is a small cap stock. What are these things? What is market capitalization? We'll definitely discuss today and hope you like. Market capitalization is calculated by the number of shares into or multiplied by the present share price. What is the present share price? The share price changes in every second and in every minute per day. So the exact at particular point or particular time, the share price is the present share price at a particular time. Suppose this is 1 p.m. So at 1 p.m. what is the exact share price? That is the present share price. Okay, so market capitalization is calculated as the number of shares into or multiplied by the present share price of a company that is traded in the market or that is traded in the stock market. Means a company which is floating its share or its stocks in the market, in the stock market, and its total number of shares into the price of the share is market capitalization. The total market capitalization of National Stock Exchange or NSE is $2.27 trillion as of April 2018, that is recorded in this date, as the 11th largest stock market of the world. The total market capitalization of BSE or Bombay Stock Exchange is 1 trillion as of March 2009. Now there are three kind of companies: large cap companies, mid cap companies, low cap companies. Large cap companies are the biggest players in the stock market, which are very steady. If there are any problem in the stock market, or if there is any crash in the stock market, or there is a problem in the economic, a sudden problem, maybe like the pandemic or a flood or any kind of earthquake in a country, any kind of problem or any economic recession, these large cap companies are the companies which have the largest capitalization, that is, which has the largest number of money trading in the market. Okay, these large cap companies are the most steady companies, and if there are any problems, the price of these large cap companies does not fall down, because they are so large and so powerful that they can absorb the shock of the bad economy, and they're the most stable company. Their growth is the most saturated, and they're very low risk. Although the large cap company in the long run may not give you a very high return, but it will give you a steady return. It will protect you from severe losses, and it is a very low risk company, but sometimes the growth of this company are very saturated because almost the whole market, the product of these companies are saturated in the market, and there is less scope of growth. But there are growths, but not a very high growth in a very short time. These are most stable companies. These are large cap companies. According to 22nd September 2020, Reliance is the most big large cap companies, which has a total market capitalization of 1425,101.09. Then come TCS, the second largest company of the National Stock Exchange, that is 946,933.04 crore. Then come HDFC Bank with 507,123.96. Then come Hindustan Lever. Then come Infosys, HDFC. All these data are taken from Money Control on the date 22nd September 2020. State Bank, Kotak Mahindra, ICICI are the other large cap companies. These are the very stable companies, and if you invest in these companies in the long run, they won't really upset you. When they are going high, you can sell them. When they are going a bit low, you can buy them. Then comes the mid cap company, where the potential of the of this company of growing to a large extent is much larger than the large cap companies. These are less stable than the large cap companies, because they have more high potential. They are the mid-term players in the stock market, and the lowest pays the low cap or the small cap companies. Okay, and the mid cap companies has potential to grow, and then the large cap companies, they can give you very fair returns in the long term, and you can buy them in a mid proportion. That if you are suppose in 100% of your investment, if you invest 50% or 60% is large cap companies, and 30% to 25% in mid cap companies, and the rest small portion in low cap companies, then the whole portfolio will be very less risky. If in times of recession, in times of economic problems, in time of any problem in this earth or this planet, your share will be much protected. Your investment must be much protected. The mid cap companies are Bharat Electricals, Steel Authority of India, Oil India, India Bulls Housing Finance, Tata Power Company, Shriram Transport Finance Companies, Glenmark Pharmaceuticals, and Cummins India. This data is collected from Reliance Money website. Then comes this small cap company, very small cap famous company, Deepak Nitrate, Blue Star, India Mart Inter, PNC Infratech, Balrampur Chini, Sonata. These companies are very risky, and if you invest in companies, maybe in the very long term, the chances of return are very high, because since they are small, since they are in the future they may grow a lot. They are not the the main players of the stock market. They are very important. They are very important, but not the main players as Reliance and TCS and all. Not main players, but not that powerful players like Reliance and TCS. And these are the small cap companies, but these are very risky. But if you buy the small cap companies in your portfolio, like 20 to 15% or 20%, then you may have a chance of a large growth of these companies in the future. If you keep these companies in the future, you may get a huge amount of money if they grow. But since it's risky, you can keep the small cap companies in lesser amount and large cap companies is in greater amount, so that in times of problems your portfolio is not very risky. The risk thing does matter a lot. If you lose all the money in the share market, it is not really very good for you if you lose the money. Okay, thank you, and do watch this video, subscribe, and do like the video. Do comment that what you want to see, and if you want any classes in Zoom class, do message me if you have any confusion with the share market, with costing or finance or financial management. I do give classes in Zoom, direct classes. Do give me a message, and do like, share and subscribe my channel.